To unpack what happened today, you really have to understand what happened in the last Fed minutes. And I don't have the paper on me that discussed the Fed minutes from the last meeting, but I can do it basically from memory. I spend a lot of time studying the Fed and their decisions. So in the last meeting, the Fed basically covered what was covered today. So as we go along, I'm going to mention, in order to save time, I'm going to mention that this was mentioned in that meeting. So let's get started. So they started out with saying that the case has strengthened for a rate hike. Some of the things mentioned after that kind of was put on the table led me to believe they might not be so ready for a rate hike, but we'll get there. We'll get there. So they balanced the risk. So when they say that in the minutes from the last meeting, they had said that the inflation, the growth, and the employment risk was to the downside. Now that they're saying things are a little more balanced, remember I said you have to shift from dovish to neutral to hawkish, and I'm going to call what the Fed did this meeting not a full shift to neutral, it's sort of neutral light, like in between dovish and neutral. It's like sort of 1 foot into neutral. They didn't kind of go full bore there into neutral. So it's we now not only have those three phases, we now have another one, which is the in-between. So we are in neutral light, which is halfway between dovish and halfway between neutral. They lowered their expectation for future hikes, meaning that they talk about their what's the term they use? They use the I answered this on Twitter. The neutral rate. They lowered their expectation for what the neutral rate would be, meaning they were going to hike less going forward. They talked about labor market strengthening and it being a little changed. They got into this whole notion of labor slack, meaning new people coming into the job market being able to find jobs, and they said they could do a little more work in that. So that's now something that took us from being neutral to neutral light, meaning it's not as good as it should be. And they said there's more room to work there. They talk about growth picking up, although I don't know what numbers they're looking at. We all know the ISMs and the PMIs have been terrible, and the Atlanta Fed just lowered their GDP estimates. So I am going to discount that statement by Yellen. It's sort of wishful thinking. They talked about household spending up. Americans are still drunken sailors. No surprise there. They talked about business investment, and this was a big point that they went over in the last meeting's minutes, that business investment has been poor. I believe in the last Fed minutes, and I'm going to have to go through this, I believe they said it was because of the uncertainty about regulation. And in this meeting, Janet Yellen said she didn't understand why. Why is there no business investment? Why is it slow? Why is the business investment slow? And the answer to that is, everyone's knows. My neighbor's dog knows the answer to this one. It's regulations. Obamacare. Businesses don't know about. They have no certainty. They can't see out into their profits in the future, so they're not investing. What are they doing? They're buying back stock and paying dividends. So that's kind of what they're doing in the meantime. So regulation, that isn't going to change anytime soon, so that's one more check for the dovish case. This is where it starts getting nuanced and interesting. Inflation expectations. It has been not there is not really inflation other than the kind of the screwflation we've talked about with healthcare premiums and so on and so forth. They attributed this mainly to energy and then imports. That's attributed to the strong dollar. So that could correct itself if people don't view that there's going to be a hike. But if the Fed wants to start hiking and the dollar starts rising, that's going to put pressure on both of those, because oil is priced in dollars and imports. That's going to be the case. American products are more attractive with when foreign currencies are stronger. just hold questions for when I'm done with this. I just want to go through this quickly. They talked, so their forecast is unchanged for inflation. They talked about their outlook balanced. I mentioned that. Then they talked about renewing the investments. So they're going to keep doing QE. Everyone thinks the Fed has stopped doing QE. They're still doing QE. It's just what I refer to as QE light, meaning when their existing balance sheet assets mature, they reinvest the funds, and they say they're going to continue doing that while they're normalizing. So it's sort of like, I don't know if you've ever seen Goodfellas, when Paulie gets a steak in the bar and they're bringing the equipment in the front door and then they're loading it onto the truck in the back through the back door. That's basically what's going on here. It's very disingenuous, so they're going to continue doing QE while they're raising rates. So it's sort of like stepping on the gas with one foot on the brake, or like I said, the Goodfellas analogy with the bar. They're bringing the equipment through the front and then loading it into the truck in the back, to launder money. She thinks energy is stabilizing. She talked about drilling stabilizing. That number's, I guess they're watching the Baker Hughes rig count. It's been coming up. Recently, now it came down. Like I mentioned, this is now into the press conference notes, by the way. Those previous ones were from the Fed statement, and this is where it gets more nuanced. She talks about the labor market slack, unchanged, flat, and holding steady, and she talks about the people seeking jobs. I want to just address this for a moment. The job quality, that these numbers that they think are so great, are poor. There's tons of part-timing. The number that was the beat a couple of times ago was a lot of government hiring. They didn't have that in this past employment number, and once you had that kind of artificial bump taken out, the numbers collapsed. One more thing, if you factor in the fact that we have a lower amount of hours worked, a smaller average hourly work week, that takes away all the job gains and puts you into like a huge deficit. Why is that again? Part-timing. Why are we part-timing? To avoid the Obamacare tax. I also know anecdotally from friends of mine who work in companies, I don't want to mention anyone's name or anyone's company, but they are doing this. She said this to me, that the company is doing this. That's the story. They talked about consumer price inflation. They're using a price index for personal expenditures. Stable. Core inflation. Now this is to me was the tell. This starts becoming the tell on the Fed's psyche. They talk about core inflation being 1.5%. And this is, again, the same thing from like the last two press conferences where Yellen has been dovish. They say they're not expecting to reach the 2% inflation target for another 2 to 3 years. So if there's no inflation, the core inflation is running for the next 2 to 3 years below their 1.5% inflation target, why would they raise interest rates? That would just be pushing the ability to reach that still further out. So instead of like 2 to 3 years, it could be like 3 to 5 years. So it would make no sense to me that they would be looking to hike interest rates when they haven't reached their inflation target. And here was the kicker. She said that they are fully committed to reaching their 2% goal. So they are going to stay on this lower for longer path until they reach the 2%. They're not going to say, we got close. They are actually going to reach it. 2 meetings ago, they talked about symmetry in inflation, that meaning that we've been below the 2% for so long that I took that as, and others too, a few others that I've spoken to have taken it the same way, that they're willing to tolerate more than 2% inflation for a sustained period of time to make up for the time that they were below the 2%. Think about symmetry. The sides have to be equal. So that could be even lower for even longer if you want to start getting really technical with it. Growth. They talked about growth coming down, which was interesting because she talked about it going up priorly. They talk about the employment rate running below the long-term rate. Conditions strengthening. Let me just read this. Labor slack pace. They talk about she talked about, this was, I don't even know what she was talking about at this point. I think she was already kind of done with the presser, and this started getting into like, what's your favorite color questions. But she was talking about keeping the interest rate down to zero so that they wouldn't have to kind of reduce rates that much. They don't want to go to zero, so they're trying to stay close to zero. So she talked about little risk of inflation. So it seems to me that they're more worried about deflation in that statement, because her saying that they don't want to go to zero means that they would go to zero if they had to. So again, now this opened the door, in my view, to negative interest rates, and that's consistent with Lael Brainer's statement from from a couple of weeks ago. So they are talking about negative rates, whether they're going to admit it or not. I don't think it's politically something that they want to do, and we're going to get into the Fed politics in a minute, but I think it's something that they are actually considering. Median path of Fed funds rate, they talk about they're looking between 2.25% and 0.5%, so roughly where we are. I talked about that the lower. Then again, she justified keeping the lower interest rates and not having to bring to zero by continuing the reinvestment. So that's again QE light that she was alluding to. They talked about then they say the economy has more room to recover before overheating. This is like a joke. I mean, the Atlanta Fed just lowered their growth outlook. We had a terrible first half of the year. The Fed is playing the gambler's game, betting on doubling up to catch up, and she's saying that the economy has a little room to run without overheating. I mean, it hasn't even started running the race. I mean, it's I mean, it's like comical. So, I mean, she's making it like, we're like, picture a chart channel like I draw all the time. She's making it like we're like right up at the beginning. We're like just bouncing off the low, in my view here. So the economy has a ton of room to run. I'm going to editorialize here for a minute. I think they should do exactly what the BOJ did and explicitly say they're willing to tolerate more than 2% inflation. If they kind of... It's sort of like when you have dinner reservations with a group of friends. Have you ever gone for a birthday party and you tell people to show up at 9 o'clock and they show up at 10 o'clock? If you tell them to show up at 8 o'clock, they'll show up at 9 o'clock. That is what the Fed should be doing, saying that they want 4% and then maybe they'll get their 2%. I mean, this is just common sense stuff, but I guess in the ivory tower they don't eat out over there. So that's my view. And by the way, we will get into the Bank of Japan if there's enough interest. Is there interest for the Bank of Japan? I can talk about that also. If you're interested, just say yes. If you're not, just say no. I'm going to kind of keep my eye on it while we're going into that, because I could go into the Bank of Japan here like you don't even want to know. Please. All right. So we'll do the Bank of Japan once we finish the Fed. We'll go through the BOJ. So we were here. Expectations for participation improved, but also says it's... so she acknowledged... This was amazing to me. So they were saying that jobs are improving, but then they acknowledged that the job rate is slowing. Remember I talked about this a couple of... I think right after the employment number. I said the rate of growth is slowing. So the pace, the delta is changing. So I like that they acknowledge that. And if they acknowledge that, then they must know that not only growth, but business inventories, which I don't want to get into. I went into that a little bit. I may tap on it a little bit. Then they are basically it's acknowledging everything is slowing. I don't think she wanted to sound the alarm, but that's basically what she was saying. They talked about that they're considering raising the rates, that most participants saw it would be smart to raise rates once by the end of the year. They talk about the neutral rate coming down. They're basically feeling for the neutral rate. This woman has no clue where the neutral rate is. They talked about normalizing up to 3.5%. When they first dropped that bomb, I think it was almost a year ago already. It was like maybe last September's meeting. This was when Yellen had that kind of had her come to Jesus moment that I was talking about. Do I have it on the chart? Let me, if I could, yeah. What's really sick is that I could look at the chart and know the exact date. It was March 29th. Yeah, I think it was March 29th. That's when she had her come to Jesus moment, when she had basically admitted that that this was going to be this way. I'm sorry, I should have been a doctor with my handwriting. It's really a chicken scratch, particularly when I'm writing down my Fed notes. When they talked about the neutral rate, and that was based also the meeting with the symmetry. Investing spending, they talked about investment spending is weak. Oh, this was when the market, by the way, took off today. If you look at my tweet, this was right around, I think, 242 or 345, no, 245, I want to say. Yellen came out, and, the funny thing about the truth is that it likes to come out, and it wants to see the light of day. It's sort of like the X-Files, right? The truth is out there. And Yellen, in a moment of pure candor, said her and her colleagues didn't want to hike interest rates because it could cause a recession and they didn't want to be blamed for it. Wow. That was like, they must have shot her up with some sodium pentothal, because that is the truth. The Fed in 1928 and 1929 didn't want to raise interest rates because they knew that eventually the music would stop playing and that the market would come down. But with a rate hike, they would immediately be blamed for it. And so it is again. History has a funny tendency of repeating itself. They are terrified to raise interest rates because if they do, they will be blamed for the recession. Talk about politicization. It's been a long day. Politicization. The economy, by the way, is also weakening, so they should be able to have a lot of cover not to raise rates, but she actually did say that. So the cat is out of the bag. They are lower for longer. I think that covers the Fed here. So what do I want to see the next few weeks? So here's the issue. The door is now technically open for a December rate hike. I think they wanted to open it so that they'd have some flexibility. The media keeps talking about them maintaining their credibility by raising interest rates. I think they're maintaining their credibility by not doing anything stupid. The Fed is sort of the doctor, the steward of the economy, and the first rule, the Hippocratic Oath, is to do no harm. And to raise interest rates into a slowing economy would be a disaster. It would be equivalent to sticking your finger in a electrical socket. That is basically what they would be doing. And they are smart for staying lower for longer. And I think I give Yellen a lot of her credibility. I think she is one of the only ones who has maintained it. With regard to politics and the Fed, a lot of people don't know this, but I think Lael Brainerd could be the new Fed chair. Either her or Larry Summers when Yellen's kind of term expires, particularly, I'd say only, if Hillary Clinton wins. Lael Brainerd served as the deputy assistant to President Clinton and was his personal representative to the G7 and G8. So Bubba likes Lael, and I think she could potentially be the new big guns over there. I heard Bill Clinton speaking the other day, and he also mentioned Yellen and Lael Brainerd together. They are sort of this new nucleus of the Fed's dovishness. So that is my view. Yellen, by the way, paid lip service to keeping November alive, the November meeting alive. There is not a chance that the Fed is hiking the week before the elections and right into the beginning of holiday shopping season. If they did, they will be crazy. So the next meeting is December. So what now with the Fed? So we have a bit of a conundrum. One, the market needs to come to terms here with either they believe the Fed is going to hike or they're not. And I had said that I thought we would rally on this non-statement, but I've also been on record saying that I think that the joy, the jubilation of the rally might be short-lived because we may start fixating, now that September is out of the way, Every day, all day, we are going to fixate on are they going to go or not in December. It's insanity, but that is what is going to happen. So with regard to the S&P, we had we closed well in terms of strength, but kind of not well enough yet to say that it's sort of that moment with Smith in the final matrix. Is it over? We didn't close over 216s. We need to recapture SPY 216s. S&P in ES terms closed rich by just under $14. The VWAP was 142.41 when all said and done. So let's say between 142 and 142 half. The market got spiky, meaning single printy, around 21.47 quarter. So we, on a pullback now, need to hold over 21.42 to 21.47 quarter. That $5 is key. We need, if you take out the single prints of the 47s, it'll come down to the 42s. That was the VWAP today, which is really not a huge change. It has not moved a lot. Some of the characteristics of these moves, both up and down, is they're on very little to no real volume here. I mean, you have the points of controls don't migrate as much with the moves up or down. Same thing with the VWAP. So we're kind of value didn't really move up that much, although price did. So if we pull back, those are your kind of right or right out levels. I'm willing to give it a little bit of kind of slackish, like if it were to gap down or there was to 40 quarter. I've talked about that. That is like the must hold, though. If you start getting below 40 quarter, I'm going to start saying that this was smoke and mirrors and the market is probably going to go back down. So those are the big levels. 47 quarter, 42 to 42 half, and then, the kind of balls to the walls, do or die level, it would be 40 quarter. So that's your ES levels. Let's talk a little Bank of Japan. With regard today also, even though SPY didn't kind of reclaim the 50 MA and didn't kind of quite close above the tails in the 216s, remember those were the prior supports which kind of became resistance, although I don't know how much they would resist if we got up there again now, because we had a test, it came back down, and now we're back up there again. By the way, if today's, I love to use the Fed day range. If you follow me, if you're new to me or if you've been following me for a while, you will notice a pattern. I believe in being long above a Fed day range, short below a Fed day range, or neutral inside the Fed day range. So above today's high, which is no surprise to me. Remember the breakdown level was 216.03. Today's high of day was 216.03. So above 216.03, we likey longy. Below 213.44, we like short. And I don't think the 100 MA would hold again. I think if that broke, like if you were to take out that low, 213.44, you could start short, and then a snap-a-rooski of 212.31 would be the add point. I think you'd easily see 211s, 210s, and maybe 209.53. That would be a channel low test. But like I said, anything above 216.03, it firms up. So that is the S&P 500 and ES. Qs. Alrighty. Where did we close on the Qs? Qs closed at a new all-time high. Very impressive. Anything above 118.12 clears the range and is clear for takeoff. If you were to get back below today's low, though, which was a 20 MA hold, and you start getting back below, let's say, 116.55, this will have been a look above and fail. And you could probably pay quickie short down to the 50 MA and maybe even a little bit lower. But the NASDAQ looks strong like bull. as they say. BOJ, Bank of Japan. So I was watching the Bank of Japan. I don't have any notes on this, but I have them up here. I was listening to their statement, and I began to read their release. I need to go back through and read it all. They're doing something called QQE. That's when QE just isn't enough. That's when you're like, kind of like max drugs. It's like QE, McQE face, or whatever you want to call it. They are basically using QE to alter their balance sheet. They are in a whole other situation than we are in the United States. They don't have energy independence. They have an aging. They are kind of the ghost of Christmas future for us. That is what we can become if we don't make some big changes now. The banks or the Japanese banks never took the write-downs like we did here after 2008 and 2009, and they've had a lot of zombie kind of bank situations. There's something similar going on in China, but that is outside the scope of this conversation. That also, by the way, has been going on for years there. But that's, again, another conversation. If anyone's interested in it, I'd be happy to get into it at some point, but not right now. So the Bank of Japan has decided that they are going to keep interest rates there at 0, and they are going to use QE to do it. So rather than specifying an amount like $85 billion a month or whatever amount, you insert expletive amount, or just insert expletive. They have decided that they'll do it a la carte as needed to keep the rates there. It's basically saying if the market is willing to keep the rates there, we don't need to support it. But if it starts getting jiggy, we will step in. I think that's very smart. It keeps a lot of their powder dry in case they need to go more. The Japanese need their currency lower, so I'm curious to see how they're going to manage that, but it could very well happen. The market initially did not take that as being dovish, but it was. And they also, like I said, added in that nuance that they're willing to overshoot their inflation target of 2%. I'm guessing that they are willing to go to 4%. So they're doing my suggestion of telling your friends you have a 8 o'clock reservation when you really want them to show up at 9. So that's my guess. They're looking to push it more. So I do think that the move from the Bank of Japan was more substantial than people think. Just because people have been trained to look for an amount that they're given with QE. This to me was sort of like QE a la carte infinity. So that's really what's going on here. They just don't want to spend if they don't have to, if the market's willing to keep the price there. If not, they will step in. So that's the story with the Bank of Japan. They did QE, they did it a little bit craftily, and they raised their inflation target dovish. So that's the Bank of Japan. All right, I think we've covered a lot with regard to the Fed. Let's get into some of the stuff you wild and woolly boys and girls want to talk about. Although according to my YouTube analytics, it's mostly guys. Got to get a ladies' night going here. Yeah, they mentioned ETF. Listen, the Bank of Japan has been a lot more aggressive than the Fed here. They do things like buy ETFs, they buy futures, they buy stocks. It wouldn't surprise me if that happens here at some point. If the Fed, really steps on the duck, they might have to start buying futures anyway. I tend to think that they do, and it just doesn't get reported. But yeah, I mean they're increasing it. I mean they are in an easing mode. That's also something I want to point out. Europe, Asia, they are all in easing mode. If the Fed just stays neutral, that's hawkish. If the Fed goes hawkish, that's like double hawkish. So it would make no sense to me that the entire world is easing and then the Fed is hiking. The Fed should just stay neutral, and that de facto is more hawkish. By the way, if they start raising interest rates, you're going to start getting that whole emerging market blow up again. Things are not going to go well. They should just stay the course. Just shh. Yeah. Anyway, with regard to precious metals, Silver got a little jiggy-rooski. I had drawn in a channel a while back. It is almost to the channel high. It actually had broken out of the channel, checked back to the channel, kind of went up again, now came back in, went up. I'll keep it this simple, 50 MA, you could use today's range. Above the high, long, below the low, short for the gap fill. Gold is off the channel low. I talked about this the other day. I think I was discussing this with someone on 9:15, if it recalls me. 9:16, it actually went a smidgen lower to the 100 MA, and now we're back up. We had a close over the 50 MA. Same thing. I like it above the range high, so that's basically 50 MA and today's high plus. Below the low, it will probably come back down to the 100 MA and might even start getting into the fibs, which are, 123s are 50% fib, and then 121s are the 61.8, and you have the 200 MA all the way down at 118. It seems to me that if the Fed is going to remain dovish, that gold should rally. Some of that is going to be contingent upon the dollar. I'm looking at UUP. Today wasn't quite an outside day. I would have actually liked if it was. It held the 100. We broke the 50, held the 100. Same thing. Above today's high of day should see the channel high, which in UUP terms would be 25s. If it lost the low, then I think it would see the channel low, which would be mid-24s. So that's what I'm thinking with regard to the dollar. We've got to use today's range. That's a recurring theme here. So that's SLV and GLD. I tend, for some reason, to like SLV a little bit more. I made some good money in the SLV a couple of months ago. I kind of bought it really low. It went a smidge lower, but then it really took off, and that really worked well. TLT did have an outside day. Let's look at TLT briefly. On 9/13, you had the 61.8 fib test, successful. The next day was up. However, the following day, the 15th, was a look below and failed doji, then a gap up, continued back up, and then today was above that now. 1, 2, 3, 4, 5-day range. I'm going to use that breakdown bar high. Anything above 136s probably gets the gap fill, maybe even as far as to 138s. Below the low of day today, I think would probably start putting a 200 MA and channel low test down in the 131s, basically. So yeah, that's my view. TLT acted today as if we're going to be in the lower for longer trot. I find that there's often action in Fed days only to reverse themselves the following day. So we kind of need to see confirmation tomorrow. If we start getting confirmation of the move, today's move tomorrow, then it's kind of hunky-dory. If we get the reversal, then we have to start going and looking at some of these levels. TLT, though, has so far done everything correctly technically as far as pullback goes, except get the channel low. It did hold the 61.8. I would have actually liked to have seen the channel low ahead of this Fed situation, but we didn't. So that should be a little bit of a testament, I guess, to some of its strength. Deutsche Bank, speaking of which, everyone is so excited to buy these banks. The banks have been neutered. They've been regulated. They've been whipped. I mean, look what Elizabeth Warren and company did to that John Stump yesterday, that poor guy. I mean, they might as well have just lashed him to the pole outside the Capitol and brought out the bullwhip, Indiana Jones style. That guy, by the way, was so bad, his testimony, he's for sure no Jamie Dimon, and I do think he is going to probably get fired. We'll see. Deutsche Bank, it actually got a little bit of an overshoot yesterday. I talked about the gap down. We'd see the lower range. If you want to try right or right out, you can use 1240 as a stop. Below there, there could be room down into the 11s. I don't want to get anyone really too freaked out, but if that would be the mid-channel low. If you want to get like the extreme channel low, you're talking like 10s, and that could even be single digits if it takes its time to get down there. So I do like it long versus 1240 stop. So that's the Deutsche Bank if you want to try right or right out. All right, I'm just going through these. Amazon. I liked that the FedEx numbers today. By the way, that is, there's this Dow theory. I don't know if it's as relevant today, these days, as it may have been in the past. FedEx looks like, to me, like a professional gap. It was a gap up that broke a kind of a mini little downtrend. It actually looks like an inverse head and shoulders that now resolved to the upside. I'll cover that. I better cover, let me write a little running tally of what I want to cover. I'm going to cover PayPal and FedEx in my weekend review video this week. So I'll show you what I'm looking at there. If you lose today's low of day, that's a little bit troubling, but the breakout really took place above 69.30. So as long as you kind of hold 69s, I still think it's kind of okay. I mean, it would be a big sell-off from 74, but I think that area would probably hold. If it doesn't, then this was a false breakout. But I do think that augurs well for guys like Amazon, because Amazon uses these kind of companies for shipping. So Amazon looks strong to me. As long as it holds the 50 MA, it's kind of okay. That has now held several times on touches. I do think it's destined to see 833.91 at some point. It might be a bit of a long and choppy road, but it seems like it's going there. My only hope is for this thing to have some kind of a huge, large pullback to load the boat. These guys are just killing it. That pullback, by the way, would be into like the 638s maybe. That would be where the channel is. Maybe on earnings or whatever, but I'm thinking this thing is going to see that the full 1.618 fib extension at 833.91. The Facebook, it's just chopping and grinding. I think the stock is destined for higher, but it's kind of it's sort of breaking the pattern of the normal sideways chop, but it is still sort of sideways. I think you could kind of just buy the dips and sort of sell it into the rallies. The progression line has stopped it several times. If this were to rally over the next few days, that would put the progression line up in like the 34s, maybe 35s. I mean, maybe you could overshoot to 36s, but I'm thinking that this is going to have to see another earnings report. The ideal setup here would actually be the pullback to trend, which I will cover in the weekend review video. But Facebook, longer term, I'm very bullish. Shorter term, I just think it's going to kind of it's going to play a little chopping. But they are executing exceptionally well. I have to think about political season is good for them. And there's there was originally the shift from print to online. Now it's from online to social, and Facebook is like, for everything that Twitter isn't, Facebook is. Alibaba, new 52-week high. We closed almost near the highs. I talked about 104s. I did a very detailed analysis a few weeks ago after the earnings gap, and I said that I thought that the stock was going to 104s. It did. It pulled back. It got back up there. It did a little chopperooski. As long as it holds 104s, 110s are in play. And if 110s can clear, then the 120 is in play, the old all-time high. I'll just keep this really, really simple here. Let's just draw a little trend line from this pullback low post the post earnings. It ramped at the pullback. As long as it's, I kind of like BTD, buying the dips on the trend touches, and then, kind of sell the rallies as it gets back up into those levels. There's not a lot of volume technically to hold it back here. So I think as long as it holds 104s, 110s are in play. below 104, then puts 98, 99 area into play. So I still like Bob. I think it's going to likely go higher. Tesla. Someone asked about Tesla. I think it could rally to the 200 MA, maybe the 50 MA, that 216, 217 area, but I think that this stock is going to be hard-pressed to really ramp until they get that damn secondary out of the way for the Solar City deal that everyone hates. So I think Tesla could be just a choppy situation. I'm loath to say that I ever want to play the stock short, but I like it for at least a day trade for a short between that 200 and the 50 MA. Remember when it gapped down in after hours, the 200 MA was the support. It should now resist on the way up. The best play here for me would be to sell out of the money strangles, very near dated, but be mindful. You could get the secondary, and you could be under a little pressure with that. I do think that this will rally once that secondary is out of the way, though. IBB. So a funny thing happened on the way to the Fed rally. The IBB and coal in particular. I think coal means that Trump is going to win the election. It's rallying really strongly. All he ever talks about is, he wants to put coal back in coal workers back to business, to work in business. I think that is destined for higher. And if the market starts catching wind that Hillary Clinton isn't going to win, IBB should effing rip. That is my take on this. So you have to watch the presidential polls there. If Hillary looks like she's going to win, this thing is going to get crushed, but it is looking more bullish here. You're now into a third touch in the close to the 299 level. I think this could see 306s, and I think it's destined for the 315 area. There is a big, big gap fill up at 338s. So I like it as a BTD on the 200 MA, which is held, and then selling into those areas. So the best thing I think it could do here is just kind of consolidate, but as long as we're over like 289s, and then if it can take 299s, the path of least resistance is a little bit higher. Just keep that in mind, that this will move on political situations. If Hillary gets trounced in the debate on Monday, it should rally. If she kills it, it's going to get smashed. It is my view. Price line. I think that this stock is going higher. It is holding the 10-day MA here. You can use yesterday's low as a stop, if I thinky. That's 1440. This thing looks like it's going to retest the old all-time high. It had a bit of a reversal looking bar. Yesterday was a hammer. Today you're over that hammer. It just looks like it's going to grind higher in my view. There's a lot of room if it could get through the old all-time high for a move into the 1600s and maybe even close to 1800, as crazy as that sounds. Priceline needs to split their stock. They're being ridiculous. Google split, Apple split, everyone has been splitting. A Priceline split would be good. My one fly in the ointment is the massive divergence with Expedia. Expedia has been in a bit of a down channel here. I'm sorry, it's in an up channel, but a down channel within the larger term up channel. I would like to get involved with this in the lower 100s at a trend touch. That being said, you now have a couple of days of consolidation near these lows, reversal bars off the channel low. It could easily rally to the channel high up into the 112s, 113s. 200 MA here, though, has been really tough. Moves over it have not been sustainable. So Expedia, you really need to get over the 200 MA and hold for it to kind of get better. Someone asked about Baidu. This isn't one that I've been following a lot lately. Just give me a sec. I want to just look at the chart. Trend break, a few days, that was on the 9.6. Check back, and now rally. Yeah, I mean, the stock, Baidu to me looks all right. It looks like it wants to rally a bit. Could fill up the triangle even up to as high as 215s, maybe even 217s, but there's a little bit of resistance that we should be coming into around 201. It's moved up a lot from the lows, from the 150s, so I would kind of play by the dips with this, but the pattern here is definitely looking a little bit better in my view. It's still in a consolidation flag area, but it's looking better. Moves down, if there's any moves down to like the 200 or the 50 MA, I like that for right or right out types of play. Someone asked about Lululemon just now. I had been kind of bullish on this. I talked about this getting up into the 80s like a couple of years. I think this was one of my best picks for 2015. It took a little bit of time, but we kind of got there. This needs to get back up over 70. Below 70 is vulnerable. It's been like playing footsie with the 200 MA here, so let's keep it real simple. Above the 200 MA, it's okay. Below is not so good. I would even, for a right or right out trade, use the range, today's range. So below 64.49, I think short to 59s, potentially even 57s. Above, I think above 65.94, it could try to get, to test into like that 70 area. Wells Fargo, maybe we'll end on Wells Fargo. I talked about that CEO. I talked about this pattern in the weekend video. It just looks weak. I think that it needs to get over the 200 MA to really right the ship, over and hold. The stock, it's below the 10-day. So yesterday, that guy, Stumpy, whatever we're going to call him, Stumpy until he resigns. Anything below 47.20, which was Stumpy's testimony high a day, is vulnerable. Below that low, which is 46.12, is still more vulnerable. Just keep that range in play. If this starts breaking below these 44s, this would now be the third or fourth touch. This thing, I hate to say this, but it could see 33s. Really, that's how weak this thing could get. The pattern looks awful. Wow. I think in the weekend I said it's a head and shoulders. It's a slanted head and shoulders. It's a rolling top. It's a failed trend check back. Just stay away. I don't like the banks. I prefer the insurers on dips, the best being Travelers, although the Met pattern is more attractive right now out of those insurers. Anyway, I think that's my story. I'm going to be sticking to it. We're getting a little close to the 6 o'clock mark. I'm going to cover a lot more in my weekend review video. If you're not following me on Twitter, my handle is @JustinPulitzer. If you caught this video late or want to watch it again, it will be posted to my YouTube channel, which is Justin Pulitzer Trades. Thanks for tuning in. I hope you enjoyed the video. I've got a book right now, but I will post this on the YouTube channel later tonight. It should be up this evening. All right, cheers.